Now, our next speaker was so concerned about the traditional banking system that he designed a brand new monetary system to protect and benefit the customer, not the bank. He created Tally, the world's first mainstream alternative currency, a digital currency representing physical gold. That speaker is Cameron Parry, the founder and chief executive of TallyMoney. And I'll just look at all that work. Look how hard he's been working. Look at all those files. That'll tell you, the amount of work that goes on to create an alternative currency. And that looks pretty good to me. So I'll leave it to you now, Cameron.
All right, thanks, Sarah. I'll stop messing around with the sizing of that. Hello, everybody. I'm Cameron Parry, founder and CEO of TallyMoney. So I'm looking at, whilst you're looking at investments and different things you can do and with different factors, what I'm really focused on and what we've created with TallyMoney is looking at looking at the mainstream money and the choices we have in that. We all need money for everyday purchases. We all have savings before we decide to make an investment or as we're saving up for things that don't relate to investments. So I just want to go through, what we've been looking at while we do it. The first reason is that we believe people should be able to access money that holds its value and remains in their control. This seems a perfectly reasonable thing to do. The earner of the money should be in control of their money rather than the financial institution that they leave it with. And this is really, sound money and money that you can rely on and that stays yours is fundamental to individual financial well-being and promotes savings and productivity in society. And we know we should have savings, that we shouldn't just live on credit and that we need to save up for things over time, such as holidays and education and whatever. So what we built was an asset-based monetary system and payments technology that protects people from and works seamlessly with the fiat currency fractional reserve banking system. So this is not a crypto. So just to start here or take a step backwards, we look at what is money. And there's three key elements. There are some other characteristics about fungibility and not having a perishable item, things like this, but there are three key elements to money, and that is that it's a store of value, a medium of exchange, and a unit of account. So as far as currencies go, at the moment, you've got fiat currency like pounds or USD or Australian dollars for some of those mining companies there being in Australia. Fiat currency is a fantastic medium of exchange. It's a great unit of account. We all operate on it. But it's a terrible store of value. Gold, on the other hand, is a fantastic store of value, but it's not a good medium of exchange and it's not a good unit of account. And so then we're left with something like Bitcoin, professing to be a currency. I'm a big believer in Bitcoin and what it's achieved and what it can still achieve as a speculative investment that may become settled down as a more mainstream investment. But for now and for a long time to come, in my view, it's not a good store of value just because it's too volatile for that. It's not a good medium of exchange yet, and it's not a good unit of account. So that kind of fails on all three currently at the moment. For all crypto enthusiasts out there, I'm a big believer in Bitcoin. A lot of what I designed with Tally took a lot of the virtues of Bitcoin. So I'm a big fan. I just don't think it's not a mainstream alternative currency. If we have a look at fiat currency, which is the euro, the US dollar, the pound, the Indian rupee there, and the Indonesian rupiah, it's not a pretty sight. And the horizontal bar there at 100% is just gold. Gold's really boring. It doesn't do anything particularly interesting, but it's valuable. People know it's valuable, and it's actually a really good bar to measure everything else against. So probably fiat currency people would like you to measure fiat currencies against the US dollar, but the US dollar has the same structural problems, being a debt-based currency. The money supply can be, decided arbitrarily to be inflated, to be expanded, and it doesn't have this level of accountability. Something like gold, it's a physical asset. It is what it is. It's not everyone's cup of tea, but there's nowhere in the world really that it's not understood as a valuable, sensible, stable, trusted asset. So it's a good litmus test. It's a good bar to measure these other currencies against. So I'm more interested in pounds at the moment because Tally is only available to UK residents in the UK, and we're all living our lives in pounds over here, in our everyday lives as well as for our savings. And as I say, savings and money is different to what you'd be looking at with your investment hat. With your investment hat on, you want to have a look at maybe what's going to get you the best return over the next whatever your timescale is. Does it need to have a yield? Does it need liquidity? All these things. But with money, and money, one form of money being pounds, we put up with a hell of a lot as the consumer, as the public, for the convenience of payments. And so I just want to have a look at this. When you measure it in something like gold, what do we sort of see? And so gold, priced in GBP, and this is how I suppose from an investment side you might look at it. In the last 12 months, it's up 16.5%. If you held your money just in gold for the last 2 years, it'd be up 27%. If you held it over the last 5 years, which are, if you're getting to the later stages of your career, you're holding on to cash and cash equivalents for long periods of time, it's up 87%, which is obviously very dramatic. That's in 5 years. I mean, that's up to 5 years. After 5 years, you start losing my attention a bit, but I'll just go to 10 years after saying that and show that you'd be 115% up. And that's just being in a 2-horse race. You've got pounds in one account, and if you had access to gold in an account that you could use as money, that's what you'd be looking at. So I do like to compare Tally to pounds, and you are in a 2-horse race, and one of them's a crippled nag. Tally doesn't actually have to do anything particularly exciting to win this race. So what's really going on here, though, and this is where I'd like to for you to consider the problem with money that is our mainstream currency at the moment. What's really happening, because again, gold's not doing anything fantastical. It has a gentle inflationary supply, but it really is, maintaining its value, holding its value over time. So what's really going on? Your pounds in your savings account have gone down against gold by 14% over the last 12 months. Your bank may be offering you something 1 or 2% if it's easy access, or they might put you in a term deposit of 5%. Inflation in the UK at the moment is 4.7%. You might be getting, let's say you got that as an interest rate and you feel like you're keeping your head above water, you'll actually pay tax at the marginal tax rate on the interest that you receive from your bank. So, you really are on a bit of a hide into nothing. But the real cost, the real value of money and the value, I suppose the value of things, the cost of things, generally doubles every 10 years over time. So there's a rule of 72 in financial planning, and that means that the cost of everything is going up at 7.2% a year on average, not at maybe the lower figure that you might see as an official interest rate. Over the last 2 years, if you'd held your money in Tally rather than your savings account with your bank, the difference is 21%. Less whatever interest you're getting from your bank. Over the last 5 years, your pounds in your savings account have been devalued at a rate of around, over the 5 years, almost to 47%. So you've lost almost half the value of that money if you had locked it in for the last 5 years. And obviously you might go in and out of pounds, but your trajectory, you're always on a bit of a loser. It fluctuates, there's no doubt about that, but you're just on a bad, probably the horse analogy is good. You're just riding a crippled nag. And over 10 years, I mean, you would have lost 60% of your purchasing power. Again, I'm just measuring this in something, I would say, honest, such as gold, and that we can all accept has a fairly stable, reliable value, and that we all understand it. So we did some gold price sort of price point analysis to have a look at over the last 24 years, if you'd put money for a period of time in gold, and if you held it monthly, versus yearly, or sorry, if you held it for 1 year, 5 years, 10 years, because when you have a fluctuating price, you can either use the principle of dollar cost averaging and continue to build up savings, which is how people save money. So that's a reasonable thing. Or if you were just trying to lump it all into, for example, a tally account and watch how it went, the crux of all this is that the average that gold goes up against the pound on average annually is 10 to 11%. But as you guys would all probably be aware, there is some volatility in the short term. And in fact, if you definitely don't want to have a loss at any period where you put money in over the last, since 2000 for a 10-year period, you wouldn't have lost anything. You would have had a maximum gain of about 20% each year. On average, you would have made 10% a year. But then the 5-year one, if you sort of have a look at that, you've got a 14% chance of actually, I might have lost some money, in pounds over that time. But, to turn that on its head, that is to say, if you hold money, your savings in pounds, you've got an 85, 86% chance of being worse off. So I will take those odds. I would rather have a very strong chance of coming out on top. And I don't want what it means to come out positively. I don't want it to be capped. I don't want it to be capped by a fixed interest rate that the bank may tell me I get, regardless of what happens over the course of 1 or 2 or 5 years. So to summarize, the problem that Tally's addressing is that all fiat currency is debt-based. It's devalued by design. Central banks have inflation targets. If they could hit 2%, they're still devaluing your after-tax money at 2% a year. That's just another tax. So the banking system is actually a lending system, and it's designed to protect and benefit the bank to the detriment of the customer. Deposits are put at risk. As I say, savings are devalued. We, as depositors, we are exposed to the risk of debt default contagion in the system and bailouts. And then, of course, since the global financial crisis in 2008, 2009, governments all around the world legislated for bail-ins. And that means as a depositor holding funds with my bank, if they get themselves in trouble, they can actually expropriate some of my deposit, put it onto their side of the balance sheet, and issue me equity in the bank for my troubles. And I won't have a choice about it. Now, as all of everybody watching, if somebody offers you shares in a company that's going bankrupt, it's not a very good investment. So it's not something you would actually choose to do, but you won't have a choice. As we said before, gold is a great store of value, but it's a poor medium of exchange and unit of account. And cryptocurrencies, Bitcoin being the most known, they're not easily understood, and not easily understood how they derive their value. And they're not trusted, and most of them are very dodgy. Bitcoin, I don't believe is, but most of them are, and so they're not reliable. Global banking, cross-border payments, that's also decades-old technology. It's time-consuming and costly. So we looked to address all this with Tally, and the solution we came up with was the best of both worlds. You can have the trusted store of value that is gold, and with a real-time medium of exchange and monetary unit of account that's understandable, so you can use it as money. It's a full reserve monetary system that is that every unit of Tally represents a milligram of gold that you hold that we vault on your behalf with Brinks in Switzerland. And that's your gold. There's no counterparty risk or exposure to our company. That's just your asset. But through our technology, with a smartphone banking app, a smartphone payment account with sort code and account number, and a debit card, you get to use the value of your asset as money wherever and whenever you like. Customers use milligrams of gold, for saving, spending, and just everyday use. As I say, it's really easy to understand how Tally derives its value. Every Tally you see represents your ownership of 1 milligram of gold, and customers already know how to use it. You already know how to use the sort code and account number. You already know how to use to do electronic funds transfers and to use a debit card. There's some protections and regulations around what we do, which we have a security trustee arrangement in case anything, if we ever cease trading, to make sure our customers' gold is protected. In that event, which is highly unlikely, but if it ever happened, we would sell, your gold would be sold and the proceeds would be returned. That's a 1% fee to your non-Tally account. We operate the connection between Tally and the fiat world under an e-money institution that is not us, but under that umbrella. And wherever we go, we get jurisdictional legal opinion, and we look at regulatory aspects of banking around anti-money laundering and fraud monitoring. All these best practices we apply at Tally. So primarily the savings market is what we're competing with here. And I say we're only in the UK at the moment. But if you're generating 10.5% on average from holding gold as money, we have a cost of coming in, a one-off cost on the deposit of 1.49%. After that, your only charge is an account keeping fee. And there's plenty of wiggle room, as you can see there, a net return of 8.5% in the first year. Obviously, if you held it over multiple years, then you're amortizing that 1.49%. So your net returns, 9% and above for those other years on average. And that compares to what your bank's giving you. There are, as I say, it's your asset. You can do what you like with it. So there's no penalty for early withdrawals. You have instant access. If you do want a decent interest rate from your bank, you lose those things. You have those restrictions on your use of your own money. And then also, as I say, there's mechanisms in place that if we fail as a business, then you get your money back very promptly, and it's not being inflated away through the Financial Services Compensation Scheme or anything like that. Again, there's just no debt in the system, so it's nice and it's nice and simple and straightforward. You know what you're getting, you know what you're doing, and that's part of the appeal of Tally. Because you're also getting your capital gain as you realise as you spend your money. You do have a higher tax-free threshold with capital gain as opposed to interest you get with a bank, and the tax rate applied is half what your marginal rate would be. So it's sort of win-win-win on the upside, on the security and the protecting from the downside, and also on the tax side. And this is available now to use as money. So that's our primary thing with TallyMoney. There is the secondary market of, how do I have an easy, convenient way of owning gold? If you have a look at Tally there, you lose 1.49% on the way in, which is a fixed rate FX and a gold handling fee that adds up to 1.49%. And then you have that monthly account keeping fee for storage and insurance and your, transactional, being able to operate transactions and that. You've got, the Royal Mint. You could go to Revolut at 3 to 4% as a commission. The FX spread is not transparent. It can be up to 3%. You've got the minted there where you'll lose about 5 to 8% on the exchange through the journey of coming in into gold and going out. And as I say, Tally is very simple. If you want pounds, you're not going to get it in our account. Just send it back to your pounds account. It's pretty straightforward. In your bank account at the moment, your everyday account, you've got one currency and you get on with life. With Tally, we give you a better single currency and get on with life. And that's kind of what we're about. So the moonshot for us, just to wrap up, I suppose, was that, we think people should have access to money that holds its value, remains in their legal control. The monetary value should be universally understood and accepted. It needs to be accountable to something real. And frankly, if the government-run system is failing the public, it's up to the private sector to deliver solutions for the public, for the people. We're a first mover on a number of fronts with this. We're on social media. We've been in the press. And that's it. That's the end of my presentation. That's protect your money, grow your money. That's what you get when you open an account with TallyMoney. We have a waiting list for customers at the moment, which you're welcome to join. We should, if you make yourself known as a master coming through Master Investor, we will give you a promo code so that you're not paying the full £29 to open an account, which we do to, filter out people who are going to get a benefit of this account and understand it. But your money's protected. It's yours. Saving it it beats whatever the bank's offering you, and you're in control.
Many thanks. And how quickly are you going to be able to eradicate that waiting list? Because I can see from the questions that you've got potential customers waiting to get involved.
We will start. I'm just trying to think. It'll be this month. It will be like 2 weeks.
Because
it'll be the week after next that we're looking to anybody on our waiting list. We have a few people already on a waiting list that we'll do another round of letting them in and hopefully having a better, more secure financial life.
That's wonderful, because Anthony says, is TallyMoney only for personal users or also open to business users?
At the moment, it's just retail customers, individuals. We do have an SME account on our product roadmap that we've been working on, and it's still probably 3 months away, something like this. So not too far. It'll definitely be this year.
And in terms of your scaling up ambitions, at the moment, it's UK only. Where else would you like TallyMoney to be available?
Look, fiat currency, I mean, I say this to people, Tally gives you an everyday account where it's the most easy to understand how your money derives its value. If you ask someone, how does your pounds in your account derive its value and what actually is it and all this, a lot of people wouldn't really know and frankly can't be bothered thinking about it. They just want money they can rely on and that somebody's not whittling away the financial reward of their efforts as they move forward in life. So everywhere in the world, fiat currency is used. We really, we all walk around with a supercomputer in our hand. We have private property ownership rights. And with Tally's technology, you can own it, you can use it. When you're moving money Tally to Tally with another Tally account holder, I could be sitting next to you, I could be on the other side of the world. It happens instantly for free. You do want that touch point with the fiat currency on-ramp and off-ramp. But anyway, in short, so everywhere really is fine for Tally. We will go in, it's a global proposition. We wanted to get all of our testing and building and house in order and structure and even our team structure and all this type of thing, proven and tested in the UK market because it's our backyard. But there are easier markets, frankly, for us to go for where the local currency suffers from hyperinflation. They don't really have great trust in government. So that would be a developing country would be our next jurisdiction, just to demonstrate its appeal in a different type of economy.
Thank you very much indeed. Cameron, I can see that lots of people are going into the webinar chat. If you go into the webinar chat, you will see the link to TallyMoney, courtesy of Master Investor. Cameron, thank you very much indeed. Really appreciate your time. Busy time. Thank you.
Thanks, everyone. And thanks for listening.
You're welcome.